Welcome to our deep dive today,
Oh, a deep dive.
where we're tackling India's economic landscape.
Sounds exciting.
It is.
Yeah.
We're going to be digging into excerpts from the Economic Survey 2024-25 to get a sense of where things stand.
Wow.
Think of it like taking a snapshot of a moving train. We're capturing a moment in India's economic journey.
That's a great analogy.
Right.
Yeah.
So we're looking at a specific point in time,
Right.
but it's constantly evolving. We're trying to kind of figure out what's going on right now.
Yes, and understand the forces that are shaping it.
And we'll be zeroing in on two key chapters: state of the economy and monetary and financial sector developments.
Okay.
They might sound a little dry,
But they're not.
but trust me, this stuff is the backbone of how the whole system works.
It's the foundation.
All right.
Yeah.
Okay, so maybe it's not as thrilling as, say, the latest Bollywood blockbuster,
Right.
but it's pretty important, right?
Absolutely.
Yeah. I mean, a healthy financial sector is kind of like the engine that drives the whole economy.
Exactly.
You know, it's what keeps everything moving.
It's the fuel. It's
Right.
like the classic cart and horse analogy.
Oh, okay.
You need a strong horse, in this case,
Right.
a robust financial system
Okay.
to pull the cart of the economy forward.
That makes sense.
Yeah.
And what's fascinating is that despite all the global ups and downs lately, India's economy isn't just surviving, it's thriving.
Yeah.
Projections even have it as the fastest growing among G20 nations.
It's remarkable.
That is amazing.
Yeah.
So let's start unpacking this, beginning with the State of the Economy chapter.
Okay.
The survey highlights some pretty remarkable GDP growth figures for the first half of fiscal year 25, hitting 6.0%.
Wow.
What does that actually mean for, say, someone listening right now?
So a 6% GDP growth. Think of it this way.
Okay.
More businesses are popping up,
Okay.
potentially more job opportunities.
More jobs, yeah.
It could also mean an increase in income for some people. More options for things to buy in the market, you know?
So more goods and services available.
Exactly, a sign of a healthy and growing economy.
Right, because people have more money.
Yeah.
They're spending more money.
Exactly.
That leads to more jobs,
Exactly.
which leads to more income and so on and so forth.
It's a virtuous cycle.
And the survey mentions that a big chunk of this growth, around 7.2%, is coming from the services sector.
Yes, the services sector.
What's driving that boom?
Well, the services sector includes everything from tourism and IT to healthcare and education.
It's a huge sector.
It's massive. It's become a powerhouse in India, attracting investments, creating jobs.
Yeah.
And here's the interesting part.
Okay.
This growth in services spills over into other areas.
Okay.
Think of it like a domino effect.
Right.
When the services sector does well,
Okay.
it creates demand for manufacturing, transportation, and other industries,
I see.
boosting the entire economy.
So it's all interconnected?
It is, very much so.
The survey also points to strong private consumption as a key driver of growth,
Uh-huh.
with a 6.7% increase.
Wow.
And get this, a lot of this demand is coming from rural areas.
Interesting.
They specifically mention a surge in sales of things like two-wheelers, three-wheelers, and tractors.
That's fascinating.
What's going on there?
It suggests that incomes are rising in rural India
Yeah,
and people have more money to spend.
more disposable income.
Exactly.
They're upgrading their lives.
Precisely.
This could mean new opportunities for businesses catering to rural consumers,
Absolutely.
a shift in the types of products and services in demand.
A whole new market opening up.
Right, exactly.
Yeah.
And even potential infrastructure development in those areas.
You need better roads,
Yeah.
better connectivity to get those vehicles to people.
Yeah.
It's a sign of a changing economic landscape within India.
It's really interesting to see how the rural areas are catching up
Absolutely.
and contributing to that growth story.
They're a significant part of it.
But wait, there's also a mention of a slowdown in investment activity. Does that throw a wrench in the whole growth story?
It might seem concerning at first,
Yeah.
but the slowdown appears to be temporary.
Okay.
There are some positive signs, especially with the government significantly increasing its capital expenditure by 8.2%.
Okay. So the government is spending more.
Investing more.
Okay.
Think of it as the government investing in building roads, bridges, and other infrastructure, which ultimately lays the foundation for future growth.
It's like setting the stage for future growth.
Exactly. It's a long-term vision.
Okay, so we've got a picture of a resilient economy driven by a booming services sector and strong domestic demand, especially in rural areas.
Yes, a very positive picture overall.
But what about the engine that keeps this whole thing running?
Right.
Time to dive into Chapter 2.
Okay.
Monetary and financial sector developments.
Let's dive in.
Remember that cart and horse analogy we talked about?
Yeah.
Well, this is where it gets really interesting.
Okay, the engine room.
Monetary policy, guided by the Reserve Bank of India,
The RBI.
or RBI, acts as the reins,
Controlling,
controlling the flow of money and credit in the economy.
steering the horse, so to speak.
Yeah.
Making sure it's going in the right direction.
It's a powerful tool that impacts everything from interest rates to inflation.
It has a wide-reaching impact.
It does.
Yeah.
The survey mentions key indicators like reserve money, broad money, and the money multiplier.
Right.
To be honest, those terms always make my head spin a little.
I understand.
Could you break them down for us?
Of course.
Rubies.
Let's start with reserve money,
Okay.
which is essentially the base level of money in the economy, directly controlled by the RBI.
Okay.
Think of it as the foundation.
Okay.
Broad money includes all the money circulating in the system, including things like bank deposits.
So that's like all the money out there.
Exactly. The whole pool of money sloshing around.
Okay, I'm starting to get it.
Good.
And what about the money multiplier?
Okay.
What does that tell us?
The money multiplier shows how effectively banks are turning that base reserve money into more money through lending.
Oh, okay.
For example, if a bank receives 100 rupees as a deposit, it might be able to lend out, say, 80 rupees of that,
Yeah.
which then gets deposited somewhere else,
Okay.
and so on.
I see.
This process multiplies the initial amount of reserve money.
So it keeps going.
Yeah.
Yeah.
Boosting the overall money supply.
Creating more money in the system.
A higher money multiplier generally means more money is available for lending and investment, which can fuel economic growth.
So it's like a measure of how much oomph the financial system has.
Exactly.
Speaking of which, the survey highlights some impressive progress in financial inclusion,
Yeah, financial inclusion.
which basically means more people having access to financial services.
Right.
The Financial Inclusion Index jumped to 64.2 in March 2024.
That's a big jump.
What does that number actually tell us?
That's a significant leap forward. It means more people in India now have access to things like bank accounts,
Okay.
loans, insurance, and other financial products.
So it's not just about big banks and investors.
No, it's about reaching everyone,
It's about bringing financial services to everyone.
empowering individuals,
Yeah.
promoting economic activity,
Yeah.
ultimately strengthening the overall financial system.
It's like lifting everybody up.
Exactly.
The survey also shows a healthy increase in the money multiplier.
Good news.
Which, if I'm remembering correctly, means banks are lending more actively.
You got it.
What's the significance of that?
If we connect this to the bigger picture,
Yeah.
a rising money multiplier suggests that money is flowing more freely in the economy,
Okay.
potentially stimulating investment and economic growth.
Yeah.
It's generally a sign of a healthy financial system.
So more lending means more economic activity.
Precisely.
Okay, so banks are playing their part.
They are.
But how do we know they're in good shape themselves?
That's a crucial question.
Right.
The survey paints a positive picture,
Okay.
highlighting steady bank credit growth,
Okay.
which means banks are lending more to businesses and individuals.
Okay.
It also mentions improving profitability for banks
That's good.
and a decline in those pesky gross non-performing assets, or GNPAs.
GNPAs.
Yeah.
Wait, what are GNPAs again?
They're basically loans that haven't been repaid on time
Okay.
and are considered risky.
Risky loans.
Yeah.
Yep.
A decline in GNPAs indicates that banks are managing their risk better and have fewer bad loans on their books.
So they're being more careful.
More prudent.
Yeah.
This means they have more money available to lend to trustworthy borrowers,
Okay.
which further boosts economic activity.
Got it. Fewer bad loans, more good loans.
Exactly.
That sounds like a win-win.
It is for everyone.
What else does the survey say about the overall health of the banks?
It mentions a strong capital to risk weighted asset ratio,
They are?
or CWIRE.
Okay.
This is a measure of a bank's capital adequacy, meaning how much capital they have compared to their risk-weighted assets.
Okay. So it sounds like banks are in good shape overall.
They are, generally speaking.
And that's great news for the economy because it means they can keep lending and supporting growth, right?
Slaves.
And it's not just the big commercial banks that are playing a role.
Right.
Rural financial institutions or RFIs and
Yes.
development financial institutions or DFIs
Well, also important players.
are also crucial for driving financial inclusion and supporting infrastructure development, particularly in underserved areas.
Reaching those who need it the most.
Right.
Yeah.
That's great to hear.
It's a positive development.
It's like different parts of the financial system working together to support growth across the country.
Working in harmony
Yeah.
to achieve a common goal.
And speaking of different parts of the financial system, let's shift gears and talk about the capital market.
Okay, capital markets.
The survey mentions increasing investor participation, particularly in the equity segment.
Lots of activity there.
Yes,
Yeah.
there's a lot of buzz about the stock market these days.
Right.
The survey points to a massive increase in the number of investor accounts at the National Stock Exchange,
The NSE.
or NSE.
Yes.
By December 2024, it had nearly 21 crore accounts.
Wow.
A huge jump from just under 6 crore at the end of 2019.
That's significant growth.
That's a lot of new investors.
It is. Millions of new participants.
This surge in investors suggests growing confidence in the Indian market.
Definitely a sign of optimism.
But this sudden influx of new investors also raises questions, doesn't it?
It does.
Are they aware of the potential risks involved?
That's a key question.
Do they have the knowledge and tools to make informed decisions?
Financial literacy is crucial,
It is.
especially in a dynamic market like India's.
It is.
Yeah.
We need to make sure these new investors are equipped to navigate the complexities of the market.
Absolutely. Education is key.
The survey also highlights the growth in systematic investment plans,
Yeah.
which are a popular way for retail investors to regularly invest in mutual funds.
A disciplined approach to investing.
Does this indicate a positive trend?
It certainly suggests a growing interest in long-term investing.
Long term, right? So people are thinking ahead.
Exactly.
Encourage disciplined investing by allowing people to invest small amounts regularly,
Making it accessible for everyone.
which can help mitigate risk and potentially yield better returns over time.
It's a smart strategy.
It is.
Yeah.
It's a positive sign that more people are embracing this approach.
A sign of growing financial awareness.
Yeah.
Which is encouraging.
Okay, let's move on to the insurance sector.
Okay, insurance.
The survey mentions impressive growth in total premiums, indicating a rising demand for insurance products.
People are recognizing the importance of protection.
They are.
Yeah.
And here's a particularly exciting projection. India's insurance market is expected to be the fastest growing among G20 nations in the next 5 years.
That's huge.
That's a testament to the country's economic potential and the increasing awareness of the need for financial protection.
It's a rapidly growing sector.
It is.
Yeah.
Seems like the insurance sector has a lot of room to grow.
Immense potential.
But with all this rapid growth and expansion in the financial sector, who's making sure things stay on track and don't get out of control?
Good question.
Yeah.
That's where financial regulators come in.
Okay.
The survey emphasizes the vital role of institutions like the RBI,
Yeah.
the Securities and Exchange Board of India, or SEBI,
Yeah.
and the Insurance Regulatory and Development Authority of India, or IRDI.
Okay, so they're kind of like the referees,
Exactly.
making sure everyone plays by the rules.
Ensuring fair play.
But isn't it a tricky balance?
It is a delicate balancing act.
They need to maintain stability, but also encourage innovation, especially in a rapidly evolving financial landscape.
Absolutely. It's a constant challenge.
Right? It's like trying to fit a square peg into a round hole.
The good analogy?
The old rules might not apply to these new players.
The landscape is constantly shifting.
It is.
Yeah.
So how are regulators adapting to these challenges?
They're trying to be agile and adaptable,
Okay.
striking the right balance between fostering innovation and protecting consumers.
That's good to hear.
It's a work in progress.
It is.
Yeah,
So we've covered a lot of ground in this first part of our deep dive.
we have.
We've seen a resilient economy,
Yes.
a dynamic financial sector, and the crucial role of regulators in this rapidly evolving landscape.
It's a fascinating story.
It is.
Yeah.
Stay tuned.
Stay with us.
We'll be right back.
We'll be back.